Let's have a great week, everybody. Who's with me? Give me a why if you're prepped and you did your work over the weekend and you know what you're going to do before the markets even opened last night. Hey, Brock, Emmett, Stavros, everybody. Okay, now I have a tougher one. Payman, how are you? Say this: win, lose, or draw, I'm going to have a great week because I'm victorious. Try that, Dark Star. It's a little lighter than dark. So no matter what, we're going to have a great week. Okay. And if you have that attitude, I think you have a higher probability of having a great week. Instead of saying, oh, it's only a great week if I'm up. Okay. So every week is precious, and don't have that always be your measurement of having a good week, or you'll waste many weeks. Okay. So getting to the markets, a little bit of victory lap. So last week I was talking about the TLT and yields that we failed to make new lows. So start talking about, I thought yields would start heading up here and that a break over 160 on the 10-year would seal it. So a pretty good move. The bond market is closed today, so I don't know if we're going to get a lot of movement. But it's my contention that even if we have pullbacks, we're not done, because you do have breakouts in both the 10 and the 3rd-year even broke out a little earlier. And I think there's a very good chance that we attack this high that we had off this first wave. And if we have a quality, it should take it out by about 10 bips. And then you could talk about perhaps fib extensions. And I don't think anyone thinks we're going to see the 2% number again, especially maybe up here towards this 200-day moving average, 220. Okay, so you're happy because you made money. Are you happy when you don't? Or do you go fetal? Oh man, you've got it. Either way, that's a pro move. Okay, that's a pro move. All right, so I think yields are heading higher. That normally means risk on, right? Because, you know, this is what got us some pretty deep corrections in the S&Ps. So if this is going to continue, I'm keying a lot of things off the yen, which is something else that I think the whole team was constructive about. So we haven't got, we were talking about this maybe being an ABC. I actually thought we'd pull back to this kind of neckline or triangle line, never got there. But here we are knocking on the door at 108.50. So maybe it's, you know, we're in a pullback phase for a day or two. But I think we could see at least the 109 handle and possibly into the 110 range. So with that happening, here's your just an observation in euro, which, you know, the euro had a breakout of this wedge line. So a little shorter term, if you're long euro, and looks like we have a couple drives setting up, there should be another. Your first sign that this rally isn't going to last, I would say, would be just like 109.40 was important last week. 110 looks pretty important to me. 110.20. Look at the hits that we've had here. The 2-week off number is about 109.80, so you could give it some tolerance, but definitely back under 109.80. I'm saving up to subscribe, Andre. I'm going to try it. Yeah. Oh yeah, that's a good point. It didn't matter. Rates going up, rates going down did not mean anything. You're right, Gregorios. But every once in a while they reconnect, and I'm thinking they reconnect here. So this is your look in the euro. And I still think if you look at the yen and now look at the S&Ps, in fact, Someone on Twitter, and I'm going to ask Steve about it because I couldn't find it, said that at the end of the day we had a shooting star. And I can't find it. I don't think the daily was a shooting star because it did not. I think this was Friday. I think a shooting star has to close on change. I don't know. I'll go to the ForexAnalytix candlestick page to find out. Steve, this wasn't a shooting star, was it? Anyway, so I took a was this this, you know, there were people tweeting that the last hour, you know, after the trade deal was announced, S&Ps came off and they said it was a shooting star, and I can't find a TF for a shooting star. This candle isn't, right?
Are we talking about
S&Ps.
Friday's candle in the S&Ps?
Yeah.
No.
I couldn't find it, and there were guys that tweeted, and it looked like, you know, so I couldn't find a shooting star. But anyway, there was some commentary that the S&Ps would have trouble at 2980, right? And it did. Okay, on this little bounce, this was, you know, this was Friday. You know, we had this, so tried this, left some handles on the table, but S&Ps look a lot like the end, don't they? So I think you got a correlation to pay attention to in the S&Ps again. Also, this with interest rates, crude giving some back, but you know that the week it had. I would favor buying breaks in S&Ps, yen, and crude for this week, and you know, looking to maybe fade dollar strength, a little bit more dollar strength up here. So I think the major theme is what's happening in yields. I think it's an important part of valuations, etc. But I would say the S&Ps, I'm not bearish, okay, because I still think there's risk on, but we start trading back over this, I'd say 80 now, okay, 82. Looks like we're getting some kind of bull flag here. You have to be out because, you know, maybe we're going to make a run at the highs again. So that's my take coming into today. We have Blake back, which is always great to have the team at full strength. And I'm hoping he had a day to rest and didn't have any Boone's Farm wine that would probably taste like garbage after what he was sipping on for a week. I sent you a bottle of Ripple, Blake.
There's no way I'm drinking
for you and your wife.
No way. No
Mogan
way.
David 2020, MD 2020.
I'm a wine snob now.
Oh, okay.
I'm sorry, I don't do that.
All right. So, what corks are you looking at here today?
You know, we don't keep corks, although we should, based on the amount of money that my wife likes to spend on wine. It's probably a good idea that I keep some sort of, you know, record of what's being spent here. No, you know, it is
right off.
It was actually a really nice trip. We've done this the last couple of years in a row because my mother lives in Northern California, so being able to drop off my kids and letting them spend some quality time with their grandparents is always good. It's, you know, because it's one thing when you have your family that lives nearby, but you see, you know, grandparents and family members all the time, but being able to spend like days on end with them is good quality time. So it was nice. And we got to go enjoy, you know, some good wine while we were out there. And it was a really nice trip. I enjoy the art of winemaking, you know, and I can taste the difference. I know there's a lot of people out there that say, oh, you know, it's wine, you know, it's like it all tastes the same. But really, you know, when you can understand, you about the grapes a little bit, understand how it's being processed, how it's being made. It's actually a pretty neat thing.
I was always curious if the feet of the people stomping on the grapes to make wine had any effect on the taste.
I'm sure it probably does if you have a little foot fungi. No, going into like, I guess it'd be going into like, some of the European regions, you'd probably see a lot more of that. Where things are processed the old school way, but it's cool. And what was really neat about this trip is we went with a couple, some friends of ours, and the husband had never been, and he really appreciates how certain liquor is produced. So for him, it was a really neat learning experience. It was neat watching him enjoy that as well.
Forex Gal thinks is asking if you've become a wino.
I'm not. I have a hard time drinking wine all the time consistently like that. But I still have fun and I still enjoy it. And and my wife definitely enjoys wine a lot more than I do. But it's it's something I can go and.
I'd bet that you don't end up on Skid Row with all the other winos.
No.
But
and living in California, have you ever been to wine country?
Yeah.
Okay, so yeah, you know what it's like. It's you go there and you taste it, and you get to try different things, and it's fun.
Yeah.
I mean, it's a unique experience, and plus on top of it, it's so beautiful, and the weather there was just phenomenal. So
yeah,
I really enjoyed it, and what I really enjoyed about the entire trip is that I was long some New Zealand yen. Did really
Here we
well with
go.
that, and so that was that really capped it, and I actually took my trade off about 20 pips from the highs. So. I jumped in the chat room and I said, "Hey guys, I'm getting out of the New Zealand yen," and I did it, and I was happy about it, and I walked away from the market, happy with that. So,
all around a great week.
It was a really nice week, and I forgot to, for me, it was really nice how. Just taking one day off or coming back a day early was really nice. Having that day of relaxation before getting back into it, because I actually when I go on vacation, I end up sleeping like 7-8 hours a night, which is nice, because I'm during the week, like right now, I'm sleeping 5.5-6 hours a week or a night, excuse me, maybe sometimes a week as well, but just getting more sleep while I'm on vacations, really it's nice. And
hey, I sleep until about 5:30 on the weekends, bro.
I know that's me
sleep
too.
In.
I feel for you, Dale, because
I don't get a break. You're gonna get a break again.
I know it's in about a month I'm gonna get a 5-month break, a 5-month hiatus where I get to get a little bit more sleep. But
well, Steve said after I move to Athens, face won't start till 3 p.m, so I'll be able to sleep in.
I tell you, if I really had the excuse me,
if you were me, would you do it, Blake?
Yep, absolutely.
You would, huh?
I would move right to Europe. I'd be like, later, I'm out of here. Yes.
Okay.
Yep.
I respect that opinion.
Yep.
All right. So, will you also be looking to buy? I know you're out of, it was a risk-on trade.
Yeah.
You're looking to, if we get pulled back in S&P and a little risk off here, that there's more left in Kiwi yen.
Well, so you know this because I've said this on many occasions over the last 6 months, maybe a year, when a China-U.S. deal got inked. I wanted to sell everything. So
right. Okay.
And that Friday for me
was, you over and over again. You were like letting people know that's going to be a window. When the window opens, take action. So everyone was prepped to do that.
Well, yeah, and so now, and you probably remember me saying this from the last couple of weeks. It's like, okay, a day or two after this all gets done, let it sink in a little bit, and then look to sell risk. And I think as everybody sits back this week, and I know today is Columbus Day, so it's bond markets are closed. It's going to be a little quieter day, but let people chew on this for a little bit, and I think that what we're going to find out is people are going to start looking at the market, going, "Hey, wait, what was agreed to? Was there any substance to it? And then B, the global economy is still slowing, and it's probably slowing at an alarming rate for a lot of different countries. So I'm so sorry, guys. I'm yawning on you guys. It is really difficult for me to get up at 3:30 versus sleeping in every morning. It was difficult getting up this morning. Anyway, what I was saying is that that I think people are going to start look around and say, I don't know why stocks are here. This agreement that China, the U.S. has agreed to, quote unquote. There's some of the Chinese media is reporting that nothing's been agreed to, anything, and obviously Trump is doing a victory lap here, but really what has been agreed to, and I'm not 100% sure, other than some more purchases of soybeans, and maybe some of the tariffs are gonna not increase, hopefully, going into the end of the year. And I say hopefully, but has anything really been agreed to? Has there been any signatures on the dotted line? I think we're still waiting on that. So I think this is a window of opportunity that we're going to get into the end of the year, into the next month to month and a half, that we might see some selling of risk. So what's that going to translate to in the FX market? I'm not 100% sure, but you look at these commodity currencies, you look at the Aussie's trading very weak. You look at the Kiwi's trading very weak. You look at the US dollar, Norwegian krona, that thing is trading extremely weak. I thought if we're going to see any type of commodity currency weakness, it was going to show up really here in the US dollar, Norwegian krona first. But, this thing looks extremely strong at the moment. Meaning that Norwegian krona is weak. And, if I was long the NOK, if I was long Kiwis, which I'm not anymore, if I was long Aussies, I'd be a little concerned at the moment at the underperformance of these currencies. So, just some food for thought as we go into, into this week. And if you're out there thinking, well, I need to buy stocks right now, I don't know. I think this 3,000 3020 level is really going to cap the equity markets. What I am looking at right at this moment in time, in all actuality, is this trend line right here. Not so much this trend line, you could do something like that, but it's more of this one right here. I'm really concerned about that. And if the S&Ps, and that's pretty far away. I mean, if you think about it, you're like, well, that's 28, 80. Yeah, but these are all the levels that I'm really concerned with as far as the S&P goes. And the reason why is because if we break, let's just call it this low here, which comes in at 28.86, then we are now going to start creating some lower lows and lower highs. So we have lower highs right now. And if we start breaking down below here sometime this week, that's going to be very concerning for me, for equities just in general. So, I'm just watching and trying to be patient here. I think today's, being Columbus Day and the bond market's closed, you don't want to get too terribly excited about, too terribly excited about anything that we're seeing, but I think we should be skeptical. I really do. There's one other currency, and I want to share this with you guys. This is like I was just talking about this in the chat room with the ForexAnalytix subscribers. And by the way, it's very quiet today, and it's just quiet in general. But I want you guys to look at the Euro New Zealand. Okay. And I want you to go this is a daily chart. Okay. Go back to 2011 and you can see this trend line here. Let me remove this. This is irrelevant. Okay. This trend line here spawns back from 2011. If you look at historically, the Euro New Zealand, a move higher in the Euro New Zealand usually equates to risk off. Okay. We have been basing here in the Euro New Zealand for a good, 8 years. All right. And you guys have seen what the stock market's done in the last 8 years. It's gone up, right? Well, the Euro New Zealand's been basing. And I think if the stock market is actually really about ready to sell off or looking like it's going to sell off, where you're going to see it is through some of these cross rates. Now, I know you guys have heard this from me multiple times. I even said it on the week ahead video. If we do see some risk off, let's say I'm right, and let's just say I'm correct. The market is like, look, global slowing, China deal is, I guess, done, whatever. People start selling equities this next month. I think we're going to know if that selling is real if the Euro New Zealand is breaking out, because I do feel that the Euro is a funding currency. It is a carry trade funding currency currently. And if you start to see the euro dollar spike higher and that you see the commodity currencies like the Kiwi and the Aussie move lower, I think that's telling us that there's going to be some risk off. So what I'm looking for in the Euro New Zealand is if we break above this this 176 level, we start breaking above this resistance, I would think that that's going to be signaling to us that the stock market is really, for real this time, going to come under pressure. Because, I think a lot of us have looked at the stock market and go, ooh, here come stocks. They look like they're going to sell off. And then they just, they look like they're going to sell off, then they pop right back up. Well, I think if we see the Euro New Zealand breaking out, I think that's going to be an indicator to me that the chances of a stock market actually, following through to the downside is quite realistic. So I'm looking at the Euro New Zealand. I was just telling the guys and gals in the chat room, I'm actually looking to establish a long position. I haven't yet, but it's a position that I'm looking at to play as a proxy to risk off type of moves in the S&P. And so if this Euro New Zealand actually breaks out to the upside, that's going to be my cue. And I am looking to play it on the long side, and I am not long yet. But it's something that's definitely on my radar. So anyway, just a few thoughts while, the market's a little quiet. I'm not going to talk too much about the cable. The cable had a nice spike up towards 127, but I thought I'd let Stelios and Steve maybe fill me in on what I missed, because I saw the cable spiking up towards 127, and I'm not really too sure why. But then again, I think I was a little buzzed last week as some of those headlines were coming across my phone. So Steve, Stelios, good morning, gentlemen.
Good morning, Blake.
Hey, how's it going? Is Stelios even here today?
To be honest, I don't see him.
Yeah,
he's not on.
Oh, okay. So
no idea. I wasn't aware that he was not going to be here. What we got last week is a lot of rumors that things are moving in the right direction, having to do with Brexit. But we've now entered the last phase of the negotiations, let's say pre 31st of October, which they somewhat call, let's say, the tunnel phase. So it's doubtful if we're going to get any more news, although we still get some headlines coming off and speculation and inside information and things like that. So today we got some negative feedback, but the issue is that the market had to reprice the chances that something could happen by the 31st of the month. and by the market was pricing in more or less an almost certain failure. And with all the news we got last week, it had to immediately reprice the chances, and that's why we got that big jump higher.
So what I noticed here is that we stopped right at the 200-day moving average.
It's not only the 200 moving average, mate. It's also a huge equivalent to the one we have in the Euro USD. It's also a very big descending wedge. So if you go back on the daily and you draw a line from the April 2018 high, you'll see that it passes April 2018. So the next high, that one, yeah. You'll see that it perfectly passes from there as well. So it's a very, very beautiful confluence of resistances.
Yeah. I mean, it looks like a lot of resistance up there. So, and I guess moving forward, if we broke through that, if we broke through 127, that's going to be a pretty good indication that things are getting a lot better.
Exactly. So, I think breaking through that confluence of resistances at 127 is going to be a big technical event. Yes.
Okay. So that therefore, for those of you that are, itching to buy the cable, maybe waiting till a break above 127 might be the better trade moving forward.
Yeah, but it's very doubtful that the market is going to find the strength to do that without getting more news that will be pointing to something positive happening. One thing is for sure, we're getting closer and closer to a binary event. So as you very well know, Blake, the market is going to move a lot, one way or the other, right?
Yeah. Steve?
Yeah, I'm here.
Oh, I'm sorry. I thought I lost you there for a second. Yeah. So, if you guys are bullish the cable and you're like, oh, I'm going to, I think a deal's going to get done at some point. If that is your stance and that's what you're thinking, what I'd probably do is wait to find some sort of technical area to be buying dips. And look, I actually believe that this false breakdown, you can see I have it circled, and I've been constructively bullish because of that for the last few weeks. You just got to buy some sort of dip in the cable. Where that is at this point, maybe is more of a move back down towards 122, 123, and then play it to the long side somewhere down here where your risk reward is better for longs. I sure as hell wouldn't want to be playing it on the long side up here. This already looks like a false breakout up here. So for me, if I was in that camp, which I'm not quite there yet, but if it were me, I'd probably be looking to play it down here. That would be like the best risk reward from a technical perspective, is playing it somewhere down at the 123 level. But anyway, that's kind of what I'm thinking with the cable. Thanks for that. Now, what do you feel about the U.S. China quote unquote trade deal?
I think it's obvious that they realized exactly what we have been saying, you have been saying for a long period of time, that a very, very bad deal or a very weak deal or a deal that wouldn't in essence include much would act as a buy the rumor, sell the news, because then the market would have nothing to expect. I remind you that when we initially got the rumors that they might go for some kind of a intermediate deal, Trump denied them, saying, no, I'm not going to do them the favor of giving them like an interim deal. It's all or nothing. And now, of course, they don't want to name it like an interim deal or a half deal. They want to name it phase one. I think that if they can, they will postpone getting a deal until after the election date. So they might start naming, okay, this is phase one and it's going to include almost nothing, just some food buying, like, agricultural goods or whatever. Then perhaps, sometime later we might get something like phase two, which is going to include a little bit more. I think they
Good morning. I'm here, by the way. Good morning.
Good morning, Stelio. I think they want to keep the market hoping and waiting for a complete deal at some point than delivering something saying, okay, this is it. This is a complete deal, and let the market, without any hope that something better is coming.
Yeah.
So that's what I'm assuming is going to happen, Blake.
All right. Well, I guess we'll be waiting on pins and needles once again. So, welcome back, Stelios, and I'm gonna pass everything over to you guys, but I want to say that thank you very much for the coverage this week. Steve really came through this week, this last week, helping out. Allowing for me to take a couple of days off. Paul Franco was awesome. He was doing a lot of the analysis on the evenings, but I'm back and I'm back in the saddle. So I want to say it's nice to be home, but it's really not. I'd really prefer to be sipping on some wine in Napa again right now. Even if it's at 5:30 in the morning, I would still be doing it if I could. But it is nice to be back with you guys, especially those of you in the FX chat room for ForexAnalytix. So
nice to have you, mate.
Yeah, it's nice to be back.
We missed you.
And Coach, I
no,
know,
we didn't.
Yeah, I know you didn't. And Coach, thank you very much for always being here and providing the great interviews and analysis that you do. So I'm going to pass it over to you guys, and I'll see you guys tomorrow.
Thank you,
Thank you, Blake.
Thanks, guys.
Good hunting, buddy.
Thanks.
Okay, I missed what Blake's. Actually, I just caught the last stuff he's talked about China. Don't have that much more to add, actually. I think I agree. But one thing I want to talk about is the UK. And, we had, did you cover it, by the way? Did you talk about the UK and what happened on Friday?
A little bit,
Okay.
but it's not as good.
Yeah, Blake asked what happened. I told him that we got, plenty of rumors that things are looking better as having to do with any possibility of getting a deal by the 31st. And of course, the market had to immediately reprice what it was pricing in, which was very pessimistic.
Yes.
But now we have to see what actually ends up happening, right?
Exactly. And
see what I mean, Sal?
Yeah, absolutely.
That's all we got. I mean,
That's enough. That's enough to start with. But seriously, though, after Friday's move and the comments, which were all quite positive, Barnier said that this is all fine, but there's no real detail. And like Amanda very correctly says, the devil's in the details, and it has to. We have to get some more details on what's planned or what's happening. But my view continues to be the same. I think eventually there will be, the more there's smoke, where there's smoke, there's fire, right? So the more they talk about these things and the more they try to grind them out, I think the more probable it is that they will. The question is, will there be some kind of an agreement or another extension? The most likely result is an extension because we only have, 2 weeks left. And there's so many things. I think,
Stelio, that even an extension, if during that time, we seem to be getting progress, so the market believes that there's a chance that this is actually going to be an extension just to finalize.
Yeah. That's what I was going to say. Actually,
that's also going to be very positive.
Yes.
Yeah.
That's what I was going to say. As things are moving, the more time passes now, the more the market will tend to price some kind of a deal. So if it's another extension to iron out some details and to get things rolling, fine. But again, we have to, make very clear that we have to get some kind of progress, concrete progress on what's happening. No more general things like, Boris Johnson has been throwing out ideas which have been quite vague. So unless there is some actual agreement on something between the Boris Johnson and the Irish, really, that's where the question is, then everything else will be ironed out, I think, in the end. But, I'm still optimistic about a no-deal Brexit scenario being, something that's not going to happen. And I've said this from the very beginning, and that's the only scenario, in my opinion, that the pound is really going to suffer. any other scenario, we're going to see a grind higher, and I think,
or even flying higher. Actually.
Yeah, it could be. I think, as I've written in the chat room, you know, some people agree, some people disagree. I think this is probably a buying opportunity for the pound because it's giving back some of its gains from Friday and Thursday and Friday. And as long, in my opinion, as long as the whole rhetoric and the whole sentiment is one is a constructive one, then I think the pound's going to do well. So, you know, will we get an extension? Probably. I think that's the most likely scenario. But that, in this occasion, is going to be a positive one, in my opinion. So just something to be aware of. I highly doubt they're going to...
and, you know, in any case, I think that anybody that has any trading experience can, you know, at least agree to the following. Being short the pound at the moment can prove to be very dangerous. So you make sure you manage your risk properly if you want to fade pound strength. Because, I mean, you know, this is a position, although I don't like to use stops usually. I mean, I have a mental stop and everything, but, you know, very often I don't put stops, you know, in place. This is, you know, one position that I would definitely make sure I have a stop in place.
Yeah. I mean, there have been people in the chat room this morning who have been short pound and making money, which is great. But you have to,
of course.
You have
I
to
didn't say that you can't make money,
you have to understand.
You have to be very dangerous.
Yeah, you have to understand the risk.
Careful. It's dangerous. Yes.
You have to understand the risk and know where your stops are and everything, because this could go really, really quickly. That's what
it's all time frames.
Yes, sir.
Yeah, exactly. Absolutely. Anything else that we had, Stelio, besides the Brexit saga stuff?
Don't think so. Let me just check. No, I think that's about it. You know, China, obviously, and the UK. That was about it over the weekend. So.
Okay. Now, as I said before, with China, Stelio, personally, I don't believe that they will deliver any kind of a deal, because if they do, it's going to prove to be very negative. So I think that we're going to get stuck, likely until the elections, in, you know, a slow grind, theoretically speaking, towards a deal. Like phase one, very little; phase two, you know, throw in something else. I doubt that we're going to get them to admit that this is a complete deal at some point. I think they would rather disappoint the market by not delivering on time than delivering, you know, something that is going to be very underwhelming. That's at least my personal point of view. And it's more than obvious from the number of times that the negotiations almost broke down that the Chinese are in absolutely no mood to help Trump deliver like a, you know, full type of deal that's going to be, you know, appealing, you know, for you know, the US audience, etc. So that's how I think it's going to end up.
Yeah, and the Chinese, they have this reputation of being very difficult in terms of negotiations. I mean, obviously, I haven't negotiated with them personally, but from what from what is said and what I read, you know, they're very peculiar. And then Donald Trump is on the other side, so it's not the best environment.
Yeah, it's not an easy mix.
Yeah. So, yeah. Okay, I mean, that's it from me, my friend.
Cool. Okay, the good thing is that we finally get, you know, some movement from the markets, which means that we have quite a few things to cover on the charts. I already see several questions, so, you know, we'll start going over the charts.
Okay,
Coach,
so Stella's saying oil and water do not mix. You're a chemist, Steve. Ever try and mix, you know, water and oil?
Yeah, I know exactly what you mean. Unfortunately, there are gas stations that try to do that for you without your knowledge.
Oh, that's full service.
Yeah.
All right,
Coach, do we have an interview today?
Lydia, Dale Pinkert.
Oh, Lydia, yes, you're absolutely right. You know, you mentioned that before. I forgot about it. You know, I'm getting older by the day.
Oh yeah, you're very old.
Indeed. Okay, so let's first cover, because I know that, you know, a lot of people have been monitoring them. Let's first go over very quickly anything that is pound related, and then we can go through the rest. So, pound yen, nice move lower. It did look corrective in nature. You can see it here. It was nicely channeled, found support at the confluence of the 50% fib and the 50-day moving average. nice thrust higher, stalled at the 50% fib of that last move, and it's now retesting the previous high. So, pound yen, quite a healthy move higher, and exactly what we said having to do with the cable. It looks extremely likely that it might, find a reason to be bid once again. So, 135, 135.50 might be that support. On the other hand, it might need to move lower. You might want to check that ascending trend line if we draw it, but no reason to do so yet. But one more move higher towards the 61.8 at 140.34, in my opinion, looks quite likely as long as the negotiations keep moving in the right direction. Now, pound Aussie, notice here where we found resistance, as we saw on the cable, that we found resistance at the confluence of the 200 daily moving average and the long-term descending wedges trendline resistance. In this case, we found resistance at the 78.6 of that last move lower and this ascending channel. So obviously, in the short term, risk reward favors short positions, but any pullback towards 184, 184.20, this, horizontal support area, might attract buyers once again. Now, pound Kiwi actually looks, if you notice, quite more bullish because we had a move lower out of this ascending channel in what clearly is a pennant. Then we got that fresh thrust higher, and now we are testing for the third time this horizontal resistance area at 2. So it's also a psychological level, right? 2. I mean, we found a high back in May. We found a high again at, 20th of September. And this is the second consecutive day, Friday and today, Monday, that we're stalling at this resistance. Now, somebody can even look this as a cup and handle formation, okay? So there's no question about it. This area 2 is very, very important for the market. So, we might get rejected from here once again. Now, of course, in order to talk about a triple top or whatever, we're going to need to move a lot lower. That's why I'm not, going to mention this probability yet. But regardless, it is a huge resistance area. We might get rejected once again. If that happens, we might find ourselves trading back at 194 because 194 is also a very, very important support area. So as long as we stay below 2, we remain trapped in this 194 to 2 area. A breakout from there, I think, should easily take us to 205, within a few days. So basically, as you see, the vast majority of the pound pairs are at resistance, right? Or have been rejected today or Friday night from resistance, which means that, the market is probably not going to find it easy to move higher from here without more positive news coming out. But once we get that, we're going to start getting a series of technical breakouts, with the most important one, of course, being this one, right? The key confluence of resistances in the cable, a break above this large descending wedge is probably going to give the signal to the rest of the pound pairs that we're moving yet again higher, and we can end up seeing huge moves. Many people are afraid to chase this move higher, and you rightly so would do something like that, since we are on confluence of resistances almost everywhere. But keep in mind that this is just the very, very, very beginning of a move higher if Brexit moves to the right direction. Okay, so you might want to try to fade it in the short term, and there's a decent chance you're going to find yourself in the right side of the market. But you should be very, very careful, because once we get more positive news, I think we can end up seeing the kind of moves we saw on Thursday and Friday, taking place on a daily basis, perhaps for more than 2 days. Okay. Now, having said that, another pair that had a significant move on Thursday and then an even more significant follow through on Friday was the USD CAD, right? I mean, it was helped by positive data, Canadian data having to do with employment data. And you can see this huge move lower. We've already broken through. Have we actually? Let me see. Yes, we have actually. Yeah. We briefly broke through this ascending trend line support on Friday, but we're back again above it. So, quite a nice 2-day move lower. I need to remind you here that I'm not so much focused with what happens with this triangle trend line, but most importantly, what's happening with this blue trend line, because this is a trend line of an ascending channel that dates back to the summer of 2017. So it's more than a 2-year formation. Currently passes from 131.30, 131.40. And, if you want to be long USD CAD, you have a beautiful risk reward here going in your favor. But if we break below this channel, I think it's very, very hard to ignore the technical implications of such a move. Okay, so you like it to the upside, more or less. This is where you want to try it, but a break below that trend line, and things will start looking very, very tough. Being long, USD NOK also a nice rejection from the previous highs, but do we have a technical event here? Absolutely not. I mean, I'm still looking at this, and it looks quite likely like a bullish consolidation. I mean, once we broke above this multi-year descending channel, which was corrective in nature, we kept saying that again and again. We came back, we retested it a few times, and then we accelerated higher. And so far, this looks like another consolidation that will likely get resolved to the upside, unless proven otherwise. Okay, now against 917, of course, the risk reward is in your favor being short, and we might extend further to the downside, but I can only, start looking lower if we break below 890. Until that happens, I don't see any reason to do so. USD SEK was one of the best, reversals for the dollar last week, and I do like the fact that we had this beautiful overthrow from this ascending wedge. Also, shows that Euro USD might try to continue moving higher from here. So USD SEK hasn't even given back much of the gains it had Thursday, and then the continuation of Friday. So this looks more decent than the USD NOK at the moment for continuation lower. Now, having to do with your questions, we have questions about the metals and crude. First of all, quite a bad day for crude today, right? We got rejected from that horizontal resistance area. Keep in mind that I've kept saying that again and again, between 50.5 and 60, what is the resistance now? Like 62.5. It's all more or less noise. You can see it here, we're in the triangle. But if you go down to a 4-hour chart, you will actually see that there are decent chances that this rebound higher was corrective in nature, and there is even a chance that this correction is over. Now, how are we going to know that? I want to see a break below this ascending channel, in which case I think we have a decent chance of then breaking the downside. Of course, in order to see such a move lower, and especially break below 50.5 in crude, most likely we will need to see stocks give back the gains we had at the end of last week and probably turn lower. Now, what are the chances of something like that happening? I'll tell you the following. The only thing I wrote today in the chat room, because I was working on some other stuff, is when we were back testing this key support resistance area at 2960, I said that, you like stocks to the upside, this is where you buy them. And so far, this remains to be the case. So we did break above this descending trend line resistance last week. And as long as we stay above it, there is a chance that stocks will continue moving to the upside. I remind you. Now, there are two things to see what has happened with risk. There is one way of looking at things saying, okay, we got progress in the Brexit front. We got some progress in the US-China deal front. I mean, not what the market would have wanted to see, but on the other hand, we didn't get a breakdown in negotiations. We got, a little bit of a move forward. And at the same time, the official announcement from the Fed that quantitative easing, irrespective of how they're going to name it, because they don't want to name it quantitative easing. We've gone through that conversation, a couple of weeks ago and last week again. Continuing at a pace of 60 billion per month. So why hasn't risk moved even higher from here? I mean, somebody would expect that if you had within a week, quantitative easing being confirmed, US-China trade deal moving forward, Brexit getting unstuck and from a very low probability of getting some kind of a deal by 31st, we have a higher probability. Somebody would expect that stocks would be at all-time highs, and they're not. Okay, so this is the bearish argument here. The bullish argument is, okay, we broke above 2960 once again. Stocks have completely ignored all the negative news and the obvious global slowdown in the vast majority of economies. So, this looks like a healthy consolidation and we can end up moving higher from here. Now, how do you get the answer of which of the two points of view is the correct one? The answer is by seeing if we're going to break down from 2860 or above 3025. Because everything in between, if you think about it, everything in between this trend line and that trend line is noise. Simply noise. Okay. As we said about crude, you can make any speculation you want. And 2960 in between these two key areas is, an area of significance. There's no question about it. So as long as we stay above 2960, you have a little bit of an argument to be on the long side. Below it, a little bit of an argument to be on the short side, hoping for a move back down to that trend line. But I think that only a breakout from either of these levels is going to, technically indicate that, okay, yes, now we've started moving in one direction or the next. So you either scalp this market and remain nimble as long as we stay between these two levels, or in my opinion, you stay on the side. Okay, so that's what I think about it. And everything else, fundamentals, etc., matter not. Because if fundamentals did matter, this market would never have been trading up here in any case, right? So to make a fundamental argument about getting the timing right and being short makes no sense. Okay, now if your fundamental argument is that the economies globally are in a bad shape and things are moving in the wrong direction, yes, you're right, but nobody says that we can't move another 200 handles to the upside before the financial markets start caring about it. Now, gold and silver. Gold and silver have obviously pulled back, and the main reason is the pullback we had in real yield. The move higher we had in real yields. Okay, we know that real yields are directly correlated to the performance of gold and silver because of opportunity cost. Gold and silver, pay no dividend, they have no carry, they have no rent or whatever. So obviously, when real yields go higher, metals, will suffer somewhat. But On the other hand, this is a 4-hour chart of gold, right? What do you see in this move lower so far? Does this look impulsive to you? Absolutely not, is the answer. So I have to tell you that yes, we're moving lower within what looks to be a pennant, right? But personally speaking, I still believe that the next move is going to be higher. Now, this next move higher might begin from lower levels than where we currently are. I mean, we can move lower towards 1460 again, depends on how much time it takes. We might even move lower towards like 1440 or 1450 or 1430. But I have very little doubt that the next move is going to be higher. And more or less the same applies with silver. You can see it here. This formation also seems to be bullish. We might even have already found a low, both in gold and silver. Might. Now, we can't be sure yet, but the chances will be very, very high once we get both of them breaking out from these corrective formations, okay? And as you see, we're not that far away. So gold and silver still look bullish to me. I still think that the chances are in favor of breaking to the upside, but it might take more days, okay? So I think buying the breakout is a solid strategy. Otherwise, you know, I don't know, if you're a scalper, of course you have, you know, different ways of looking at things, but I can help you in that. Lol, Ziggy, I just read your comment. Because in a deal scenario, it will trade at 150. Gautam says, yeah, I don't know about 150. I think it's probably very optimistic, but we can agree that 130 is a very, very easy target. If we get positive news about Brexit, I think that cable indeed can be trading at 130 in zero time, literally. So I agree with you. Now, 150, of course, in any case, 150, in order for us to see cable back at 150, not only we would need to get a positive resolution having to do with the Brexit deal, but dollar would have to help as well. Because in order to see 150, you would definitely need to see dollar weakening as well as pound strengthening. Now, having to do with the treasuries, and then I'm going to go to the DXY, as you see, the treasuries broke down from this ascending trend line support at the end of last week, and now we're back testing this trend line as resistance. So it looks likely to me that either from here or from a little bit higher, or close to 131, we might see a continuation lower. So I still think that we might see higher yields in the short term. And having to do with the DXY, you can also see the DXY here. Here is the break we got from this wedge. You can look at it as a wedge, right? And we might end up back testing it like, let's say, 98.60 to 98, like 70. But as long as we remain below this trend line, I would favor more weakness. Okay, so that's what I think about it. QE for opponents, no matter what Powell says, of course, 60 billion per month, that is very likely. So dollar is likely to get weaker anyway. If only things were that simple. If only things were that simple. We got, very frequently, we get dollar and the metals bottoming exactly when we get news that we should create the opposite and the reverse. So, very frequently, the market reacts completely oppositely to what you would expect from an obvious fundamental development. So, yes, theoretically speaking, and, if the financial markets were not so much manipulated, and I'm not talking about unofficial manipulation, I'm talking about the official manipulation, because what central banks are doing is in essence official manipulation, right? I mean, we don't have free markets, we don't have capitalism, we don't have price discovery, because many aspects of the market are openly manipulated by central banks, and knowing how correlations work, that means that almost all financial assets are directly or indirectly manipulated by central banks, because there is the direct way. For example, we're buying bonds, so obviously that means that yields are not going to be what the market decides they should be, because you have a buyer with a huge pocket buying, for example, treasuries, which means that yields are going to be moving lower, irrespective of what the market believes to be a fair compensation for holding US debt, for example, right? But there is also the indirect way that, you know, central banks manipulate the market, for example, stocks. So even central banks that are not buying stocks, because I remind you that we are aware of at least 2-3 central banks that are buying officially stocks. For example, the SNB, the Swiss National Bank, is probably the biggest hedge fund on the planet at the moment. I mean, they own huge stakes in many US companies, and, you know, companies, you know, globally, right? So even when they're not manipulating the rest of the markets directly by, you know, buying or whatever, they do it indirectly, because investors have a Pavlovian reaction to what is happening. So, for example, they know that monetary easing from central banks is risk positive. So, you know, they're going to go on and bid several markets just because they feel like the central bank has their back. So, you know, in combination, directly and indirectly, in essence, central banks play a huge role in what's happening in financial market, which is exactly what capitalism isn't. Okay. Coach,
Yes,
I'm assuming it's time.
Yes, now we could really find out what's happening with cable. Lydia's with us.
Yeah, absolutely. Looking forward to hearing her opinion about what's going to happen.
Thank you, buddy.
My pleasure.
Steve Volge, everybody. Round of applause. Oh, deafening. Okay. Let's see. Lydia, I'm promoting you. Probably the first promotion you've had in a while.
Oh my God, with a joke.
Huh? I'm unmuting you now that you're. I'm promoting Lydia. Can you hear me?
Yes.
I'm promoting you to. Here's your new title: Senior Currency Strategist.
Oh wow! Hey, thank you. I accept.
Now,
you could put that on your business card.
Business card.
I don't.
Resume.
I don't know how a lady is going to find the senior.
Oh, yeah, senior.
Like the senior.
Good point, Steve. All right, head FX trader.
That's nice. That's
for
better.
the Federal Reserve. Would you like that gig?
That'll work.
All right. So great to have. Go ahead.
Are you enough of a hypocrite or so bad at economics that you could actually be part of the Federal Reserve, Lydia?
Probably not.
Me too. I agree with you.
Then you could have a pretty good signal service. But anyway, Lydia, welcome back.
Thank you.
Great to have you. And I was thinking of you last week when cable took off. And I guess the key question everyone's asking now is that the beginning of something? It's stalled at a pretty important area. What are your thoughts on cable, both fundamentally before Halloween and technically what are you seeing, my trading warrior sister?
Before Halloween, the Brexit deadline, the D-Day.
Yeah.
So I heard a little bit of Steve's take on the pound, and I agree. I've been targeting 130 actually since we were down there in 122.
Okay.
And just kind of walk you guys through my thoughts on it. So this is my larger view. We've had these two waves to the downside. It took us right into support. I think those are 2016. 2016 lows. Okay. And then dial into a daily chart. So what I was looking at is really the fundamentals. And just like Steve had said, as Brexit has been turning out better, than expected, as the market actually cheered the suspension of Parliament and didn't fall apart on that news. And as the markets are actually liking the actions that the new Prime Minister Johnson is taking, for me, that changed the trend, even though the trend has not yet changed.
Okay.
So I feel like we can.
So you're hopeful now that we could avoid a hard Brexit.
No, I didn't say I was hopeful. I'm saying what the
Okay.
market is doing.
Okay. Okay.
Right.
Yeah, because
I
I
was
mean
saying
it's
what the
still a
market
lifetime till the end of the month, I guess, 2 weeks.
Right. So we'll see what happens at the end of the month. To me, to me, a hard Brexit is not off the table. I don't think it's off the table. But right now, actually, the onus or the burden of acceptance is actually on the EU now for a long time. It hasn't been like that really at all. So that's kind of the first time where we're kind of like waiting on the EU. Like, what are they going to do? And will they be hard-nosed with the backstop, with with Ireland and the Northern Irish, all that stuff. So I think hard Brexit is actually still on the table, but right now the market is liking the developments. And really surprisingly was the last Bank of England meeting, their interest rate announcement, where Governor Carney, and I mean he made it sound like the whole BOE, but they're very they're hawkish. They're actually quite hawkish. I think they would like to raise interest rates because of the weak sterling over for the past 2-3 years. UK is one of the places that still has in high inflation, and high is like, what is it, 1.7? It's not even above 2 like it used to be in the past, but it's higher than other major economies. So I think they would like to raise interest rates, and they're just kind of holding off until October 31st, like I guess like the rest of us, and really seeing what Brexit does. But I was surprised how hawkish they were, quite frankly, and that's also been able to put a little bit underneath the pound as well.
Yeah, I didn't know that, Lydia. So I mean that's in sharp contrast to the U.S. Fed.
Absolutely, yeah.
So then that interest rate differential could work in favor of cable now.
Yeah, and we'll see that against most of the central banks there. It's going to be a sharp contrast. Again, I think once we see what happens October 31st, and then see what the BOE does in subsequent meetings, and how they're sounding, what their rhetoric is sounding like in subsequent meetings to support that. Again, I think we're all just waiting to see how this deal or no deal pans out. So, but that put a first bid underneath the underneath cable. And then we had what happened last week with the Prime Minister and the EU, and that's when we got these two skyrockets on.
Okay, so you're flat now. We went to resistance. Correct. How does someone who just watched it in amazement look to finesse an entry now?
So what I would do, and I like this correction that's going on right now. So instead of getting too excited about it when markets open, you should look at this. See if I'll dial down even for, yeah, that's better. So we can dial down in, and we can throw a fib on this move to the upside, which was a great hold of the 61.8 previously. I mean, it was brilliant. It was actually quite textbook, and shot up, almost hit the 123, which is a good target. It ran into on the daily chart. It ran into the 200-day moving average. So now we have this nice correction. So it's already come into the 38.2, and we're seeing buyers stepping in on this correction. So that's what I would be looking at. This.
Would you kind of like, you never know when markets correct if you're going to see 38.50, 61.8, 78.6. No, so do you teach people to like put a piece on at each fib level?
Yes. So for new traders though, and I work with a lot of newer traders, I tell them to pick, and I'll let them know. I tell them to pick because I think when you're first learning markets, the part of it is the psychology. So you want to kind of find your level, pick and stick to your setup. But yeah, I like to piece in as well. I don't typically piece in on a 38.2 unless we see that the trend is strong. So pound likes to correct to the 38.2 when we are in strong trends. Otherwise, we get deeper corrections with the pound And that's just what I've seen over the years. So I like to typically set up within the Fibonacci levels. But so this is an interesting development for it to pop right off of the 38.2, and we're already about 50 pips higher. So
yeah, and look at that RSI reading that you have on that chart, over 80.
Yeah.
That's a confirmed high in my book.
Yeah.
It would be very unusual for a market to peak when momentum is confirming it.
Yeah, I agree with that. Yeah.
Okay.
So we have the RSI confirmed.
What a move in EG
Oh,
last week.
man.
I mean, it was like, I mean, everyone thinks it's a low beta, trade, but wow.
Yeah, exactly. It can really move when it does move. But I agree with you. I agree with the perception that it's low beta. So this is the weekly chart, and it looks like, oh, we've been consolidating, but you kind of have to zoom out to see like all this consolidation. If you don't remember, or haven't been following, like this is still quite a bit of a correction. So this move right here to the downside is quite, I find it to be quite significant. You can see like how I thought we were in a correction just what is that, a month ago, just back in September. This was a correction right off the 68.2. It breached a little bit, then it peaked at 90 again, and now we're in this down move. And this is flipped bearish. So short term, this thing has flipped bearish.
So rallies.
Also, this also has corrected almost into the 38.2, and it's backed off as well. Again, a sign of a strong trend. I think pound is generally bullish at this moment. We'll probably be bullish and see buying into the 31st. And if things turn out really well, then I mean, we're going to see this thing back in these lows in the support level, 86, 80, 85.
Is that your next major support, 86-ish?
Oh yeah.
Based on what, weekly or monthly or?
Yeah, exactly. I mean, even the weekly chart, right? Like that's been.
Oh, you have a moving average coming in there.
Yeah, and the moving average is coming in.
Okay.
Yeah, so earlier this year, we had all of this. We remember we spoke at this time, and you were looking for 94, and I was like, you're crazy. I'm maybe 87, 88, 50.
Yeah.
And it popped there. So, I think Euro Pound is flipped completely. Completely, but it has flipped trends. I think it's headed back into the support zone.
Okay.
On the weekly chart.
Guppy?
Yeah. So I still think the pound yen can get to 140. Again, I think the pound still has room to move on most of these. We can drill down into the daily. Or did I have it on the 4-hour? Okay, so daily.
Yeah.
On the daily, if we just throw, fib while it's correcting, and we just throw a Fibonacci level on this latest move, like most of these pairs, we're gonna see. This is also just correcting. It still hasn't gotten into the fibs like I would like to see. I like it to move a little bit lower, so closer to 135. But this too, if we're just looking at this, I'll just move out to a weekly so we can see the whole thing. But that, I have a resistance level, and then at 140, and then we have the 61.8 at 140.34. So
a lot of confluence there.
Yeah, exactly. I feel like we're more headed for 140 than here stopping at this might next. I have another resistance here at 138. I think 140 is where we go, and that becomes our line in the sand for the pound yen.
Okay.
Obviously, if we get above that, then we can make it back towards the underside is 148. Remember, we were at 148 for a while, but on the underside is really 144 and then 147. So I think if we get above 140, we hold above 140. Brexit goes brilliantly, then we get a deal. It wouldn't be too surprising to see that. Plus, that supports a weak yen. And let's see what equities do. I don't know. There's been some correlation. The correlation breaks, between the risk currencies like the dollar and the yen. And
you have a view on the yen. I know you pay attention to it. Yeah,
no, I'm always really surprised when we see a strong yen, quite frankly. So, I'm always a little more biased on a weak yen. I think just fundamentals support it. Bank of Japan, So I'm more biased on a weak yen. So when we see strong pound, I feel like we could accelerate, which is why I'm biased to 140.
Okay. And the look that cable has against the commodity currencies
Yes.
after last week.
So I think, let me start with the Kiwi, because I think this one's really interesting. Being at $2, two Kiwi,
Yeah.
is a huge level for the pound Kiwi. And I don't know. I wasn't, I've been really busy the last several months. So I've only been paying attention to the dollar cable and to the euro pound and the pound yen. So when I looked up and like, okay, let me check out my other pairs, and was surprised to see us at $2. And so this correction took us into the fib, you know, that's what I like. And now we're back at $2. So if we project on this, and so I know you guys don't see me use this much, but we project and see where this is headed after this really brilliant correction. We're headed right back to these highs at, you know, really 205, and
Okay.
it comes in at 204.90, or was that 204.09? So we can really come back into these highs here again, which is really just, you know, just a correction. It took a while, took all year, but it's really just a completion of this correction, fine, if we can get to new highs. So again, against fundamentals. So we have this Bank of England that's more hawkish than, surprisingly hawkish, I should say, not more hawkish, but they're just surprisingly hawkish. Yeah. After being so dovish for so many years. And we have a Reserve Bank of New Zealand that is decidedly dovish.
Yeah, they want to go to negative rates.
Yeah, exactly, which is surprising.
Yeah, that's a great fundamental story with the technicals backing it up.
Yeah.
I mean, maybe if you look at it as like just one huge rectangle, and 82 to 204 is 22 cents, that if pound really gets going, maybe there's 2.25 in the trade. Yeah, I don't trade it much, but
there's a lot of potential for pound to really unwind the last 2 years of bearishness, right? I mean, we've been extremely bearish on all of these. I think pound Kiwi is actually one of the leaders, just because the RBNZ has surprised us with multiple rate cuts this year, where I don't think they were forecast to give rate cuts. So we have a really weak Kiwi right now. And if the pound ramps up again, whatever happens after the 31st, we'll see. But there's a lot of potential for pound to really ramp up. So I think, you know, against some of these other currencies like the Kiwi, same with the Australian dollar, it's the same thing. The RBA is quite dovish as well. And so, you know, the Australian dollar is also weak, and this is also moving. It's ready to move higher. So this trade is far gone too. I looked up like, oh,
yeah,
this one is has already taken off too. And then the Canadian dollar still has a lot of room. So Canadian dollar has been really strong this year.
Is that because Canada is not as dovish central bank wise as Australia and New Zealand?
Right. Yeah.
Okay.
Yep, I think that's exactly right.
Because they're talking about that they would like to tighten too, wouldn't they?
And they did. They tightened in the beginning of the year.
Oh, okay.
Yeah.
That's a long time ago for me.
Yeah, isn't it?
Yeah. So.
Isn't it? So this is knocking on former lows. It's right now contending with $1.66.
Yeah.
Is that levels, former lows on, this is our weekly chart. So this is a major level that is just kind of battling it out. It's also the 38.2, you know, fib on this major move to the downside. So this
one looks like, you know, I wouldn't buy this looking for it to catch up to the other two.
No, I wouldn't.
It's like the weak sister. Why be?
Yeah, the fundamentals are totally different.
Maybe you wait for the other ones to give topping signals and short this one shorts the weakness.
Or if you want to buy it, you definitely need to wait for a correction. Move below this support and into the fibs. Throw a fib on here on this latest move. Drill it down a little bit. So, but I agree with you. I wouldn't be buying this at all. I would, because the fundamentals don't support it at nearly as much as the other two, the Aussie and the Kiwi. So this one we just keep in mind.
Good diagnosis.
Yeah.
Of showing the strength and the weakness. To me, it looked like pound Aussie was a strength, followed by Kiwi, and then this one. So I know you're an RIA.
Yeah.
And so you advise people on what to do in the market. Do you have any feel for what's happening here in U.S. equities with the Fed and political political turmoil and you know, is the market really kind of being trapped in a range for over a year? Do you think this is distribution, or are you looking for another wave to new highs in here, Lydia?
I'm actually looking for another wave to new highs. And
Okay.
for many of the reasons that Steve had stated, I don't feel like the central banks will allow the markets to crash again. I'd be interested. Well, it will be interesting to see what those conditions would be. Back in 2008, we didn't have this QE. Central banks, maybe the Swiss National Bank, and I think they were really in the Forex market. No central banks are in stock markets like we're seeing right now. Not just the SMB, but the BOJ is probably one of the biggest holders of ETFs. I don't even like ETFs, mostly for that reason. So there's a lot. The landscape is much different. We have computers now, the algos. We can turn markets off now with the flip of a switch. Now, what do they call them? Break stoppers.
Circuit breakers.
Circuit breakers. Thank you. So it's the mechanics behind markets now are completely different. When we were purely human mechanisms, we would have fallen by now already. We would have corrected or be at, or I don't know, of a crash. I think we would have seen a 20% correction already to the downside, because we have this slowing global economy. We've had this trade war. I mean, we've had a lot of catalysts that have not moved us lower. I mean, we've dipped. This has been buying the dip environment for, years now.
You have any comment on what's happening in the overnight Fed funds and repo market?
No, I think that's something that we absolutely need to watch. And again, if things were more human, I thought that was a catalyst actually, to see the dollar weaken even more. It hasn't weakened as much as I thought that would trip the dollar up and start
just because of less confidence.
Yeah, less confidence, and the fact that the Fed had to step in overnight markets. I was reading some analysis, I think from Bloomberg, that was the impetus for 2007 was that the overnight repo markets were frozen, and that was like the first signal. People ignored it at that canary time. Well,
they'll probably ignore it here for a while too.
Oh, of course, because we have all these, we have everything that I just laid out. Why would the markets go down? So I think that's something that to certainly pay attention to. And I think it's also an impetus. I want to say I think the dollar weakens for those reasons, but again, there's the whole risk off characteristic that the dollar tends to have. We'll see if it has it again now. It's a different world now. I mean, fewer global economies around the world are using the dollar. The yuan has kind of stepped up in certain places that it didn't have that kind of clout again 10 years ago. It's just a different thing. I mean, so I'm telling clients, like, we long reduced our stock exposure, but we're buying small, just kind of small buying on dips and just kind of staying, but we're in the markets.
How about if you have this narrative for the dollar to be diversifying outside of the U.S. into other markets whose currencies are beginning to cut into the, part of the de-dollarization trend?
Well, public markets, I don't think anything is more attractive than U.S. markets still.
Okay.
Yeah, right. I don't think anything's more attractive than the U.S. markets.
Okay. So now would be a good time to show us your great site and the services you provide, Lydia. Thanks for stepping up and coming in today.
No, thanks for having me on. Thank you. So what I wanted to do is actually alert you guys. This is early, but I've finally put a course together that has recordings and teachings of the things that, like, the way that I trade. So this is Great for new. So many of you don't need this. But if you are new and you just want something to hold on to and to have for your own, this is coming out. I'm going to launch this in November. So I finally just put it together. So stay close to my Twitter. You follow me at Faith Might. And stay close to my Twitter when I announce the page, the sign-in page, so you can sign up and get it at a reduced price. But I finally put a course together, so I think that this will be really helpful. You have the video, so you can go back, vocabulary, different concepts. Really excited to launch this. It's been a long time. Again, like it's been many years on Twitter being asked to teach. I do teach as well. So this really, I call this like, this is the curriculum. And then if you want my mentoring alongside of it, then we can do that as well. But I think if you're not having time to set aside time to meet with me directly week after week, or I do it twice a week, we meet twice a week, then this is something that you can do at your own pace. The videos will come out weekly, and then at the end of the course, it's a 10-week course, and at the end of the course, then you'll get all the videos and all these the vocabulary and everything like that. So
and diploma.
Huh? And a diploma. I should get out a certificate. Why not?
Yeah,
Good idea, Dale.
How about this for the title? You can no longer be called a newbie.
Yeah,
I think people would
no
really
longer a
work.
newbie.
Yeah, people would really work hard towards that. So speaking about staying close, you know who to stay close to, my trading warrior sister. And thank you so much for hanging out with us today. And I'd say the gist is constructive on cable against almost everything else out there. And there's still a lifetime between here and Halloween. So
Yeah, no kidding.
yeah.
Yep.
So all I could say is on Halloween, Lydia, don't get scared if the UK says boo.
Yeah.
All right.
That's what to do now.
All right. So thanks very much again, Lydia. Some great looks today and appreciate it.
Thank you. Thank you guys so much. Thank you for having me.
Okay. Lydia Idem Finkley at Faith Might, everybody. Always, great to have Lydia and look at her charts and her important technical levels.
Oh, somebody wants to see my chart. Can I just show my S&P 500
yeah,
chart?
Sure.
I'll give you guys a look at that.
Okay.
Sure. And
you're a very good guest. You look at the questions. It's nice.
Yeah. Well, I'm glad
it makes my job easier.
Makes it easier. That's me on Twitter. I put it my handle in the chat, everyone.
Yeah.
And then S&P. This is my S&P 500 look. Weekly chart.
Huh.
So yeah, see all my lines there. But I mean, that's basically where we're at. This is December. It was nice correction. And really was looking to see if we would hold. This is 24. Yeah, 2,400. That was what when we held that, and I knew we were going to revisit 26. And when we got above 26, it was like all this bearish, all the bears out there. I was like, forget about it. We're going to new. I knew we were going to new highs. So we kind of stumbled. We got above 3,000. And so, I mean, we're in a correction. This is like a dip. There's nothing scary out there. Nothing has been able to rock this market.
What level would
rock this market? At this juncture, if we get below these lines here, this is
2,700,
27. Yeah, I would even say 27, but really 26 because that's my 61.8. I do the same as I do on Forex. So 2,600 would be the line that makes us visit. At 25, we got the moving average coming in, but 24 again. And then obviously below 2,300. Then I could see us starting to turn bearish and panic and all of that. But until any of that, we're still just stuck here at this support level. 2,800 is like former highs up here. I mean, we're nowhere near panic levels at all. Mm-hmm.
Okay, so some lines in the sand, that little bonus look on S&P from Lydia. All right, thank you so much, Lydia. Good hunting, and hope pips just flood your account during this fall trading season.
Thank you. Same to you all. Thank you all so much.
Okay, everyone. So that's it. Remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. Thanks again, Lydia.
Thank you.